Okay, welcome back. So we had done the taxation. Next thing is the capital expenditure and financial investments. And when we're talking about capital expenditure, in this case, we're talking about buying or selling fixed assets. So, for instance, if you bought a van, you would put in some kind of minus figure, the amount you paid for it because it's money going out. Or if you sold a van that you owned, you'd put in some kind of a plus figure because presumably you got money in when you sold it. Financial investments, the same goes. If you had a whole bunch of investments, if you had shares that you bought in another company or something like that and you sold them, then you'd have a plus money in here. Or if you decided to buy some sort of investments like buying shares in another company, you'd have a minus figure in here for the amount of money you spent on purchasing those investments. Okay, in this case, in the ordinary level, it's quite straightforward. It's usually only the purchase or sale of fixed assets, or the purchase of fixed assets really is the only one that ever comes up. And we figure out how much you spent buying fixed assets by looking at the difference between the balance sheets. Like we see that you had land and buildings, first of all, as your only fixed asset. In 2005, or at the end of 2005, you had 850,000 was your cost price of land and buildings. At the end of 2006, your cost price of land and buildings is 930, which we can assume means, because as I said earlier, we can assume that you didn't sell any, that you must have then bought assets to the value of 930 minus 850, which is 80,000. Okay, so 80,000 purchase of land and buildings. I just said purchase of land / buildings because you don't know whether it was land or buildings or both, or combination that you bought. Okay. Next thing is equity dividends paid. So again, like I said already, the profit and loss extract shows you what you've decided you ought to be paying for the year. You should be paying 22,000, it says, proposed dividend. Down here, though, in the balance sheets, it shows how much you still owe. So you were supposed to pay 22,000 for this year. You still owe 22,000, so we'll assume you didn't pay that 22,000 yet. However, you also had 15,000 that you owed at the end of 2005. And since this says you owe 22 and not this 22 and the 15, we assume that you must have paid off this 15,000. So the dividends paid is 15,000. One way that will work for calculating all of these things when you have an item up here and items in the balance sheets is you can always take whatever the amount is in the earlier balance sheet, in other words in 2005, so for instance for dividends it's 15,000, add on whatever the amount is in the profit and loss extract, in this case 22, so 15 and 22 is 37,000, and subtract whatever you have in the later balance sheet, so 37 minus 22 brings you down to 15 again, and that's the figure you can put in here. Now that will always work. I mean, if we look at it for, again, something like the tax paid 38, if you look here we have 38 plus, what was the tax for the year? 44 minus 44 gets you back to the 38 that you put in here. Same will go for any of them, any of the ones that you have both in the current liability section and up here. Okay, so next thing is, at this point we normally do a kind of a subtotal, so we just see where we stand, adding this and subtracting these, and we should end up at a plus or minus figure depending. In this case that comes to plus 58,000. Okay, it's just a subtotal. We're not finished yet. We have a bit more to go before we get our completed document. We have a heading for that subtotal though as well, and it is net cash inflow, because again it's plus, it'd be outflow if it was a minus, before liquid resources. I'm just going to have and financing. I'm running out of room. And financing. Now that's basically, that's where you stand before you do the liquid resources portion and the financing portion. Now, in ordinary level, we just have a financing portion, but at higher level, we have another heading that goes in between these two, which is management of liquid resources. But we still use this as the, if you like, the heading for this figure, but we're not going to have a liquid resources in here in the ordinary level question, just a financing. So in a way, it's just before you do the financing, this is your subtotal. Okay, financing is the last thing then. And I mentioned earlier that you can finance your company by either selling shares in the company ordinarily, or getting a loan to get money for the company to run your business. So in this case, we look at, first of all, your shares, and it has here your shares in 2005, or at the end of 2005, you had issued or sold, if you like, 590,000 worth of shares. At the end of 2006, it says you've issued or sold 600,000. So from the end of 2005 to the end of 2006, or in other words, during the year 2006, you must have issued or sold another 10,000 worth of shares. So I'm going to do a little, since there are two things here, I'm going to put in here 10,000 issue of shares. Issue of shares. And as I said, that's one way of raising money to run your business. And another way is by getting a loan. And in these questions, the loan figure that we're normally looking at is a debenture. And a debenture is just a fancy name for a particular type of loan, a loan which acts like a bond. And in other words, the difference between, let's say, debenture and a regular mortgage that somebody might get when they're buying a house is, these bonds or debentures, you get the loan, you borrow, we'll say, for instance, 100,000, and you don't pay back any of that 100,000 that you borrowed until a specific date in the future, maybe 10 years in the future. You pay the whole thing back in one go, 100,000 in 10 years' time. What you do is, though, every year during that 10-year period is you pay interest, but you don't pay back any of the amount of the loan that you borrowed, only interest. Whereas with a regular mortgage, if you were buying a house, just a regular person buying a house, you'd borrow 100,000, we'll say, and every month you'd pay a little bit of the 100,000 back, as well as some interest, and you'd keep doing that until it was all paid back in 10 or 20 years' time. Whereas with debentures, all gets paid back in one lump sum at the end of 10 or 20 years, and you just pay the interest on a regular basis. Okay, so if we're talking about debentures, a fancy name for loan, you had 180,000 worth of loans at the end of 2005. It went down to 120 at the end of 2006, which means you must have paid back some of the loans. You know, some of your debenture loans must have come due and you must have paid them back. And the difference between these two is 60,000, which means you paid back 60,000 worth of loans, which means that that's money coming out of your account if you had to pay it to somebody. Okay, so I'm just going to say repayment of debentures. Okay, so then we put these two together. 10,000 was a plus because you got money in from selling shares. So that plus 10 and the minus 60 gives you a minus 50 in total if I put the two of them together. If I add that to my total that I had earlier, or my subtotal, if you like, that I had earlier, plus 58 and a minus 50 gives me plus 8,000. And that is, we hope, if we've done everything correctly, the amount by which your cash has gone up by from one year to the next. And we just call it increase in cash. Okay, and just one last thing then, if you wanted to double check to see if you had done it correctly, that your cash flow statement was correct, you could just go back to the balance sheets, and in the current assets where it contains cash, you could see, had your cash gone up by 8,000 from one year to the next? And in this case, it was 64,000 at the end of 2005. It's 72,000 at the end of 2006. That is indeed an increase of 8,000. So you can feel pretty sure that you have done everything correct along the way. Now, it is possible you get the right answer after having made some errors, but you can feel reasonably assured that that's the correct figure, or that is the correct figure, that you haven't made any mistakes up here.